Welcome back to Synaptic Dividends. We break down a new dividend stock often to help you build your passive income portfolio. If that's your goal, make sure you're subscribed so you don't miss out.
All right, today we're looking at a real powerhouse in its industry, Ecolab. Now, this company has been paying and, more importantly, growing its dividend for decades, which puts it in that elite club of dividend aristocrats. But here's the real question for us. After such a long run, is its dividend still a rock-solid investment for you and me? Well, let's jump into the numbers and see what they tell us.
Okay, first things first. Whenever we look at a dividend stock, the very first question we have to answer is the dividend safe? I mean, before we get excited about anything else, we need to know if the company can actually afford the checks it's sending out.
And to do that, we use my absolute favorite metric, the free cash flow payout ratio. Now, it might sound a little technical, but the idea is super simple. Just think about your own budget. Free cash flow is like the money you have left over after you've paid all your essential bills. So this ratio just tells us what percentage of that leftover cash the company is using to pay its dividend. And you guessed it, a lower number is always better.
So what's the number for Ecolab? It's just 37%. Think about that. For every dollar of pure cash profit that comes into the business, only 37 cents goes out the door as a dividend. That leaves a massive 63-cent cushion for them to reinvest in the business, pay down debt, or whatever else they need to do. From a safety perspective, this is a fantastic number.
And what's really great is that this isn't just a one-time thing. Look at the last 5 years. Even back in 2022, when things were a bit tougher, it was still a very manageable 54.8%. The rest of the time, it's been living comfortably in that 30 to 40% range. This shows us that the dividend isn't just safe today, it's built on a foundation of consistent, strong cash generation. So, the dividend is safe. Check. That's the first hurdle cleared. But for a lot of us, safety is just the beginning, right? We also want our income to grow every single year. And, well, this is where Ecolab's story gets really impressive. 32. For 32 straight years, without missing a beat, Ecolab has given its shareholders a raise every single year. That kind of consistency is incredible, and it's what earns them that coveted Dividend Aristocrat title. It's a huge signal that this is a stable, well-run company that really values its investors. But come on, 32 years? That period covers some seriously rough patches for the economy. So you have to wonder, how on earth did they manage to keep raising the payout through some of the biggest financial storms we've ever seen?
Well, let's put it to the test. During the global financial crisis back in 2008, when it felt like the entire system was collapsing, Ecolab raised the dividend. More recently, during the pandemic, when their biggest customers in hotels and restaurants were literally shut down, you guessed it, they raised the dividend. This isn't just good management, it's proof of an unbelievably resilient business model.
Okay, that's the history. But what's happening right now? Is that growth starting to slow down? Nope. In fact, it's doing the opposite. It's accelerating. Over the past decade, their dividend grew at a solid 7.1% per year on average. But the most recent hike? A whopping 12.5%. That shows that the business is not just stable, it's thriving, and they're sharing that success with shareholders.
All right, so we've looked at the dividend safety, we've seen its incredible history of growth, and we've checked out what's happening right now. The numbers are pretty clear, so I think it's time to put it all together and deliver the final verdict on Ecolab. So let's just quickly recap the highlights. First, the dividend is about as safe as it gets, with that low 37% payout ratio. Second, you've got that elite 32-year growth streak. And third, it's passed every stress test you could throw at it, growing right through major crises.
So what does this all mean for you? Well, with a current dividend yield hovering under 1%, this is definitely not a stock for someone who needs high income right now. But if you're a dividend growth investor, someone who cares more about the long-term compounding power of a fast-growing payout, Ecolab is pretty much a textbook example. You're trading a low starting yield for the potential of a much larger income stream down the road.
If you want to go deeper and understand the full business model behind these numbers, check out our in-depth analyses on our main channel, Synaptic Investing. And of course, if you found this breakdown helpful, a like is always appreciated, and subscribe for more dividend analyses. Thanks for watching.